Hey guys, so NIO stock has been growing at a relatively fast rate for the past 6 months or so. Back in the middle of May, the stock was trading for around $3.50 per share, but it's now been traded at around $41 per share. A large amount of this increase has come from the rapid growth NIO stock has experienced over the past 30 days or so, where the stock has almost doubled in price from $21.85 on the 12th of October to now being traded at $41.60 per share. So there is definitely no denying that there's been a lot of good news coming out around NIO stock recently, and the business does seem to be making some very positive and encouraging developments. However, some people argue that the astronomical stock growth that NIO has experienced recently is not justified. So in this video today, I'm going to be taking a closer look at NIO stock and some of the good news that has come out around the company. I'm also going to be taking a look at whether the current stock price growth is sustainable heading into the future, or whether I think that the price may crash in the coming weeks or so. It's certainly one that divides opinion. Some people believe that NIO stock will continue to grow in the coming weeks and months and could potentially hit that $100 mark. However, a lot of people think that the company is simply overvalued at the moment. Just before we get into this video, I do have another video on NIO that I uploaded a couple of weeks ago, and this video does go into a bit more detail about what the company actually do and more of the in-depths about NIO as a company. So if you're not too familiar about NIO, it might be worth going back and having a look at that video first. Also, remember to leave a like if you do enjoy this video. It really does help me out a lot. Be sure to subscribe if you want to see more videos like this in the future. And apart from that, let's get right into it. So over the past couple of weeks or so, there has definitely been quite a lot of good news come out around NIO stock, which has been a catalyst for the share price growth. And this has definitely been very encouraging for current investors and has given people more confidence to invest in NIO. So first up, an analyst at Citigroup recently raised their price target for NIO to $46.40 from the $33.20 last week. And this did cause a 6% surge in the stock price. So the analyst has a bullish outlook on China's EV sector and does believe that NIO has a better product cycle in 2021. Now, this positive Chinese market sentiment was also backed up by a recent Reuters report stating that China's State Council estimate that sales of clean energy vehicles are expected to account for 20% of overall new car sales by 2025, which is up from just 5% right now. There were also a number of unconfirmed media reports saying that NIO are going to be entering the European market next year. Now, this would be a logical move because even though the Chinese market is pretty big, they would still definitely benefit from a global expansion into other parts of the world. So obviously I know that this is not a confirmed report, but it is definitely a positive thing to see, because if NIO can get access to the European market and eventually the US market, they could definitely start to pump out more cars and increase their delivery numbers quite significantly. Now, last Friday, NIO also launched their 100 kWh battery, as well as announcing battery upgrade plans at an event in Beijing. So the new 100 kWh battery features cell-to-pack technology, which realises 37% higher energy density and will increase the range of NIO's vehicles to 615 kilometers, which is very impressive. So NIO have come out and said that the improved performance for the 100 kWh battery is a result of 4 different technological improvements. This includes better thermal runaway management, a higher integrated design, all climate thermal management, and a end cloud bidirectional communications BMS. So this is all highly technical terminology, but one thing is for sure, and that is that the new battery and the new improved range on NIO vehicles will increase the desirability of the new NIO cars and will draw in more customers who are looking for a higher range on their electric car. So all of this is very encouraging to hear, because it does show that NIO have been working hard on innovation and improving their tech, which will play a vital role in staying competitive with other electric car manufacturers out there, especially going on into the future. Their new battery is also available to pre-order right now, which is good. NIO did also come out and say that the users of the current 70 kWh battery can now choose to either purchase the new battery outright, or they can go for a flexible upgrade plan, which costs approximately 880 yuan per month, which is $133 per month, or they can go for a 7,980 yuan per year upgrade plan, which is $1,207 per year. In addition to this, for the purchase of a brand new NIO car with the 100 kWh battery with the battery as a service model, 128,000 yuan will be cut from the car's price, with the driver paying a subscription of 1,480 yuan per month, which is approximately $225. Last week, NIO also announced that they had delivered 5,055 vehicles in October of 2020, which was a new monthly record and was also a 100.1% increase in year-over-year growth. So when we take a look at the deliveries of recent months, in July, NIO delivered 3,533 vehicles, August was 3,965, September was 4,708, and this means that October, the deliveries were up 7.4% over September and 27.5% over August. And in my opinion, this is really impressive delivery growth from NIO, and it shows that they are really pumping out more vehicles every single month. So as of the end of October, the total deliveries that NIO have made in their company lifespan now has hit 63,000 vehicles. So this means that they are still a long way behind the likes of Tesla. However, they are showing very promising and consistent growth every single month. So that was all of the good news that has sort of been driving NIO's stock price up over the past couple of weeks or so. However, some people do think that a correction is due to come in the near future. So some people would argue that the recent share price surge means that NIO is now a very overvalued company. So with their share price now being $41.60, their market valuation is now a whopping $56.7 billion. So this does put them at a higher valuation than Ford, who have a market value of $30.4 billion, as well as General Motors, who have a market valuation of $53.6 billion. So General Motors did deliver over 7.7 million vehicles globally in 2019, with 2.8 million of these being sold in the US, while Ford delivered 17 million vehicles globally in 2019, with slightly less than 2.4 million being sold in the US. So when you do compare this to NIO, who have delivered just over 63,000 vehicles in their total lifespan as a company, and recently set their monthly delivery record at 5,000 vehicles in a single month, they are not really even comparable to the likes of Ford and GM, yet they are worth more as a company. So a lot of investors do therefore believe that NIO are quite overvalued right now. So the current share price that they do have has got a lot of years, decades worth of consistent growth baked into the price in order to make the valuation worthwhile. And this is reliant on NIO not only continuing to grow at a pretty fast rate, but also the entire electric vehicle market continuing to grow at quite a fast rate too. Now, everyone does know that electric vehicles as an industry is going to continue to grow over the years, especially as governments around the world are cracking down on emissions and trying to get people to use more environmentally friendly vehicles. However, there still is a lot that can go wrong in a company's lifespan from now until the point where they reach their fair valuation. And if NIO do start to run into problems and end up not being as successful as we think they're going to end up being, then obviously this could cause the share price to drop quite significantly further down the line. So a lot of people have been comparing NIO to Tesla and are saying that NIO is the next Tesla or the Chinese Tesla. Now, nobody really knows how big NIO are going to end up being in the future. And who knows, they could one day go on to be on par with Tesla, if not even bigger. However, one significant difference between the two companies is that NIO do not actually make their own cars themselves and instead outsource this to another company. Now, NIO recently announced that their plans to build a factory in Shanghai have collapsed, and instead NIO will be continuing to use their current contracted manufacturer, which is the state-owned company called JAC Motors. So this does mean that NIO will be continuing to pay their manufacturing fee for each car that they produce, and this can have a significant impact on the profitability of NIO, as the overall profit margin on car production is going to be fairly low. And as of right now, NIO's gross profit margin is at 3.29%. So Tesla, on the other hand, do manufacture everything themselves, and this does allow them to cut costs and keep more of the money for themselves, which does drive a higher profit margin. Another interesting thing to think about is that NIO have been known to add new shares to the market, causing share dilution. So in the past few months, they have completed 2 sets of share dilution when they created and offered 72 million new shares in June and 101.7 million new shares in September. So because the number of shares is going up when NIO add new shares to the market, then the value of each current share decreases slightly, meaning that the shareholders that are holding shares right now own less of the company than they did before. So in my opinion, there's no reason to think that NIO won't do this again in the near future, especially while the current share price is quite high. So I'm now going to take a quick look at NIO's current stock price chart and have a look at whether they can sustain their current growth. So this is the current stock price chart for NIO, and as you can see, we've been trading relatively sideways for the past year or so, back in October 2019, and then around May was when we first started to see the quite fast growth in the share price. If we just zoom in a little bit here, you can see I've added a trend line going from May up until about the end of October, where we saw a fairly consistent growth across that trend line. There was a few ups and downs where we saw some spikes and some dips, but in general it has been following this trend line quite accurately. So now looking at the recent spike in the share price that has been going on for the past week or so, we can see that this is definitely deviating a lot from the current trend line, as $41.60, which is what I believe they're trading at right now, is just way too high to stay on this trend line. So obviously I know that stocks do not have to stick to the trend line completely, and that is far from the case of a lot of growth stocks, as they do go up and down quite a bit. But it is definitely something to note and something to consider before you invest in NIO, as this trend line does suggest that there could be a pullback coming in the near future. Now obviously I could be completely wrong. This graph could be completely thrown out of proportion going into the next month or so if NIO keep up this fast growth. And we do know from the likes of Tesla that electric vehicle companies do tend to experience parabolic growth in a short space of time. So NIO could definitely continue to go up. It could even reach the heights of $100 per share going into 2021. Who knows where they can go? But I just thought it was worth showing this graph and just sort of having a look at how off-trend this recent spike puts NIO. I would also just like to point out that I am not a financial advisor, and this video is for purely entertainment purposes only. All of this research that I've done is just I'm forming my own opinions based on the research that I've found. And before you invest in a company like NIO especially, you should definitely do your own research and look into them yourself before you make any decision. Overall, I am fairly neutral on NIO. I do hold a small position in NIO. I think my cost basis right now is $25, so definitely not the lowest it could be. I was fairly late to the hype train of NIO. And I do generally think that NIO is going to do well in the long term. However, I do think that there could be a pretty big pullback into the coming weeks, where I could see us drop down to around the $20 to $25 mark. But who really knows where they're going to go, and I certainly could be wrong on that. And that is all for today's video, guys. Please be sure to leave a like if you did enjoy the video. Remember to leave a comment, let me know what you think about NIO and whether you're going to be buying more shares in the future. Remember to subscribe if you want to see more videos like this in the future. And apart from that, thanks a lot for watching.